Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I will explain why I believe AMD stock has already bottomed. More importantly, I will explain why I believe AMD stock will likely recover over the next 1 to 2 years. As always, I would like to give you more context first. AMD stock, as you may already know, has dropped a lot since early 2024. Initially, AMD stock soared a lot in early 2024 because many investors were betting that AMD would be the next Nvidia, or at least AMD should capture a small percentage of the AI data center market that is currently dominated by Nvidia. But in reality, AMD is nowhere close to Nvidia. AMD is at least several years behind Nvidia in the AI data center market, specifically in rack-scale AI systems, AI software stack, and developer support. AMD stock has dropped a lot since early 2024, mainly because its AI GPU sales have been much lower than what the market initially anticipated. However, while AMD's AI GPU sales have been much lower than expected, AMD's CPU business has been performing exceptionally well. In fact, AMD has been gaining a lot of x86 CPU market share from Intel for several years already. This trend will likely continue over the next several years because AMD has a much better product roadmap, better chip designs, and better process node technologies compared to Intel. I will talk more about this later on in this video. Also, right before I started making this video, AMD and Saudi Arabia's AI company Humane announced that they will collaborate and jointly invest up to $10 billion over the next 5 years to deploy 500 megawatts of AI infrastructure in Saudi Arabia. This will benefit AMD a lot going forward because AMD will sell a lot of AI GPUs, server CPUs, DPUs, and Rocket M software to Saudi Arabia over the next 5 years. More on this later. So in this video, I will explain why I believe AMD stock will likely recover over the next 1 to 2 years. I will talk about these topics in this video. First, I'll go over AMD's recent financials and revenue outlook. Then I will discuss why AMD will gain more CPU market share from Intel, and whether AMD will capture more AI data center market share from Nvidia. Finally, I will talk about AMD's valuation and whether I think AMD stock is a buy, hold, or sell now. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing analysis videos every week that will help you become a great investor. Each video usually takes me more than 30 hours to make. So if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you'll know when a company becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before talking about AMD's financials, I want to show this to you first so you will understand AMD's biggest growth opportunities going forward. AMD has these 3 major business segments. First, the AI data center business, which includes EPYC server CPUs and AI GPUs for data center and large enterprise customers. Second, the client and gaming business, which includes high-performance Ryzen CPUs and GPUs for consumers, gamers, computer enthusiasts, and professionals. And third, the embedded business, which includes industrial embedded processors, adaptive SoCs, and FPGAs. AMD used to earn the most revenue from its client and gaming business segment. Now, AMD earns the most revenue from its data center business because of the large demand for AMD's EPYC server CPUs and, of course, the large demand for AI accelerators that are essential for AI training and AI inferencing workloads. According to the most recent financials, AMD's total revenue grew 36% year over year. It had a gross margin of 54%, which was up 2% year over year. It also had a non-GAAP operating margin of 24%, which was up 3% year over year. If you compare AMD's recent financials to Intel's recent financials in the same period, you will realize that AMD has been taking a lot of x86 CPU market share from Intel for several years already. Moreover, AMD has been growing much faster and has much better margins than Intel. Similar to Nvidia, AMD's data center segment is expected to become its most important and fastest growing business because of the strong demand for AI accelerators and data center CPUs that power both traditional cloud computing and AI workloads. For example, in the most recent quarter, data center revenue grew faster year over year than revenue from the client and gaming business segment. Additionally, operating income from the data center business was nearly double that of the client and gaming business segment. Here's the important part you should know. If you want to know whether AMD will continue to grow in the upcoming quarters, you have to look at the main products that are driving AMD's revenue growth right now and in the upcoming quarters. For example, at the time of making this video, AMD's 4th Gen and 5th Gen EPYC server CPUs and its MI300 series AI GPUs have been the main growth drivers in the data center business in recent quarters. In the second half of this year, Oracle is planning to deploy a large cluster of AMD MI355X AI GPUs and 5th Gen EPYC CPUs. At the same time, AMD's next-gen MI355X AI GPUs will begin volume production by the middle of 2025. This means we can expect that AMD's data center business will likely grow much faster in the second half of this year compared to the first half of the year because of this new product launch and because Oracle will deploy a large cluster of AMD MI355X AI GPUs this year. AMD's client and gaming business segment has been performing exceptionally well over the past several years, mainly because AMD has been releasing much better Ryzen CPUs that are more energy efficient and more performant than Intel's high-end CPUs. For example, at the time of making this video, AMD's latest Zen 5 processors, such as the Ryzen 9950X3D and Ryzen 9800X3D CPUs, are at least 2 generations ahead of Intel in terms of performance and energy efficiency. As of now, Intel cannot compete with AMD in the high-end x86 CPU market, so Intel has been lowering CPU prices just to maintain its CPU market share for many quarters already. More on this later. In terms of revenue outlook, for the next quarter, AMD's management expects revenue to grow by about 27% year over year. However, the gross margin is expected to decline to around 43%, mainly because of the one-time $800 million inventory charge. Like Nvidia, the US government has restricted AMD from selling its high-end AI GPUs to China. This is why AMD is taking this huge $800 million inventory charge in Q2. For the full year 2025, management expects total revenue to decline by approximately $1.5 billion, mainly because of the recent export license restrictions. Still, despite the US ban on sales of AMD's MI308X AI GPUs to China, management still expects AMD to achieve strong double-digit percentage revenue growth in 2025. This means AMD's revenue should grow by around 20% or slightly higher this year. Over the long term, based on consensus forecasts, AMD's revenue is expected to grow by around 23% this year. This is despite the US government's recent restrictions on selling AMD's MI308X AI GPUs to China. After that, AMD's revenue growth is projected to slow to the mid-teens over the following 2 years. At the time of making this video, I believe AMD has a strong balance sheet. In the most recent quarter, AMD reported $7.31 billion in cash and short-term investments. In comparison, it had $4.73 billion in total debt and long-term operating lease liabilities. This means that even if AMD pay off all its debt and long-term operating lease liabilities in advance today, it will still have $2.58 billion in cash remaining. Moving on, I'm going to explain why I believe AMD will likely recover over the next 1 to 2 years. Here's why. First, if you want to know which company is dominating the CPU market, you just need to check Amazon's best-selling CPUs. For example, at the time of making this video, the top 15 best-selling CPUs are all AMD CPUs. There is only one Intel CPU in this list. This has been the trend for many quarters already. This is surprising because Intel used to have a monopoly in the x86 CPU market. Now, the x86 CPU market is mostly dominated by AMD, especially in the high-end segment. So why is AMD dominating Intel in the CPU market? Why does Intel keep losing market share to AMD in both the consumer CPU market and the data center CPU market? Over the past few years, Intel has lost significant market share to AMD, largely because of repeated product delays, chip design flaws, manufacturing setbacks, management missteps, and ongoing struggles with process node technology. At the time of making this video, many of these issues are still not resolved yet. Intel has fallen behind nearly all major competitors including Apple, Nvidia, AMD, TSMC, and Broadcom. Here's the deal, I believe AMD will continue gaining more market share from Intel over the next 2 years for several reasons. Unlike Intel, AMD doesn't own its own semiconductor fabrication plants or fabs. Like Nvidia, AMD is a fabless chip design company. AMD outsources chip manufacturing to TSMC, the world's largest and most advanced contract semiconductor foundry. In contrast, Intel is both a chip designer and a chip manufacturer. The issue is that Intel has fallen behind AMD in chip design for several years already. It also trails TSMC in process node technologies, advanced chip packaging, and mass manufacturing of cutting-edge chips. TSMC has a major cost advantage and benefits from massive economies of scale in chip manufacturing compared to Intel. In the semiconductor industry, once a company falls behind in both chip design and manufacturing, it becomes extremely difficult to catch up to competitors. And this is exactly what Intel is facing right now. Based on what I know, Intel does not have the resources and capital to compete in both chip design and leading-edge chip manufacturing. Many investors do not know this. Over the past several years, AMD has adopted a mix and match chiplet strategy that is well ahead of Intel. This has allowed AMD to continue releasing CPUs that are easier to scale, more flexible, more cost-effective, more performant, and more energy efficient than Intel's best CPUs. For example, at the time of making this video, Intel still does not have any answers to AMD's 3D V-cache technology that stacks additional chiplets of L3 cache vertically onto the CPU die. AMD has released CPUs with 3D V-cache for 3 years already. In addition, AMD often uses TSMC's most advanced process technologies, which are at least 1 to 2 generations ahead of Intel's. This allows AMD's high-end CPUs to be more energy efficient and more powerful compared to most Intel CPUs. For example, AMD will be the first customer to use TSMC's next-gen N2 process node to manufacture its upcoming Venice EPYC Zen 6 CPU, which will be introduced in 2026. Here is another example. In the data center market, Intel has been steadily losing market share to AMD in recent years. That's because Intel's latest Xeon CPUs still struggle to compete with AMD's previous gen EPYC CPUs, and let alone the current gen EPYC CPUs, in performance, core count, and energy efficiency. Now, to stay competitive, Intel often has to sell its Xeon CPUs at lower prices than AMD's. This is why AMD has much better margins than Intel. Looking ahead, once AMD launched its next-gen Venice EPYC CPU in 2026, which is built on TSMC's N2 process, I believe AMD will capture even more market share from Intel in the data center CPU market over the next 2 years. Let me show you this extract from AMD's recent earnings call. Management expects the company to continue gaining CPU market share because its latest Ryzen CPUs for consumers and EPYC CPUs for data center customers are much more competitive than Intel's offerings. Management also talked about this year's revenue guidance.
Looking forward, we see a clear path to continued share gains as customers ramp their 5th gen EPYC offerings that deliver unmatched performance, efficiency, and TCO across every major cloud and enterprise data center workload. We passed key milestones in April to begin manufacturing 5th gen EPYC at TSMC's new Arizona fab, with first production shipments expected in the second half of 2025. Longer term, we announced our next-gen EPYC Venice processors are the lead HPC products for TSMC's 2-nanometer process node. Venice silicon is in our labs and performing well, with bring-up and validation progressing to plan to support a 2026 launch. In summary, our strong first quarter results and second quarter outlook reflect the momentum we are building across our business. While we face some headwinds from the dynamic macro and regulatory environments, including the recently announced export controls for Instinct MI308X shipments to China, we believe they are more than offset by the powerful tailwinds from our leadership product portfolio. Against this backdrop, we remain confident we can deliver strong double-digit % revenue growth in 2025 based on accelerating share gains with our latest generation of Zen 5 EPYC and Ryzen CPUs and Radeon GPUs, and ramping production of our Instinct MI350 series accelerators in the second half of the year to support an expanded set of customers and AI workloads. We also expect full-year growth in our semi-custom business, and for our embedded business to return to year-over-year growth in the second half of the year, driven by the reduced inventory levels and improving demand environment. To capitalize on our unprecedented growth opportunities and deliver our next major growth arc, we are expanding investments in our product and technology roadmaps, go-to-market initiatives, and full-stack AI software and data center scale solutions capabilities. We're also doubling down on our execution to deliver, and where possible, accelerate our industry-leading roadmaps.
Moving on, let's talk about the AI data center market. This will be AMD's biggest growth opportunity going forward, driven by the large demand for generative AI applications, frontier AI models, reasoning AI models, AI agents, and eventually AI robotics. All of these use cases will require significantly more AI infrastructure going forward. However, contrary to what many investors think, I believe AMD will capture only a small share of this market, likely in the low single digits, while Nvidia will continue maintaining the largest market share. Here's why. If you have been following the AI data center market, you will know that Nvidia holds a near monopoly, and this has been the trend for many years. For example, at the time of making this video, Nvidia controls around 88% of the data center GPU market, while AMD holds just about 4%. The remaining share is split among Broadcom, Google, Marvell Technology, and other much smaller ASIC vendors. This is my prediction. Going forward, I believe Nvidia will continue to dominate the AI data center market for many years. That's because Nvidia is far ahead of its competitors in key areas such as AI accelerators, AI networking, interconnects, large-scale AI systems, AI software stack, and developer support. Many companies make the mistake of thinking that they can compete with Nvidia by just building a better AI chip. They don't understand that it's about building an entire AI infrastructure or full-stack AI ecosystem, which is extremely hard to do. Creating a faster chip is not enough. Now, to compete with Nvidia, companies like AMD need to build a complete AI ecosystem that includes AI hardware, AI software, networking, rack-scale AI systems, system software, and large developer support. This is incredibly difficult to copy. Nvidia has been building its accelerated computing platform since it launched CUDA back in 2006. Today, Nvidia's accelerated computing platform includes not just AI GPUs, but also high-speed interconnects that connect all the AI GPUs together in a single system. Networking hardware, CPUs, DPUs, Ethernet networking, Nvidia's proprietary InfiniBand networking switch, AI software stack, and the system-level software needed to run large-scale AI systems. By contrast, AMD has only started taking AI infrastructure seriously after ChatGPT came out in November 2022. Here's the deal. Even if AMD managed to catch up to Nvidia's latest rack-scale AI systems, its ROCm open-source parallel computing platform is still many years behind Nvidia's proprietary CUDA platform, which was first introduced in 2006. At the time of making this video, CUDA has over 5 million active developers and supports more than 3,000 GPU accelerated applications. CUDA is Nvidia's biggest competitive moat. It only runs on Nvidia GPUs. This gives Nvidia a huge competitive advantage because AI developers, software engineers, researchers, and companies are essentially locked into Nvidia's ecosystem if they want to use CUDA to build and train AI applications and frontier AI models. CUDA has become the de facto standard for training and deploying neural networks, large language models, and frontier AI models, as well as for running other compute-intensive workloads such as natural language processing, computer vision, scientific simulations, big data analytics, quantitative finance, and high-performance graphics. This is why I believe Nvidia will continue to dominate the AI data center market and maintain around 80% to 90% market share over the long term, while AMD may capture around 5% of the market. Many investors do not know this. At the time of making this video, AMD's AI hardware is around 2 years behind Nvidia, particularly when it comes to large rack-scale AI systems. Right now, AMD simply cannot compete with Nvidia in large-scale AI infrastructure. For example, AMD's current gen MI325X and upcoming MI350X AI GPUs can only scale up to 8 GPUs per node. In comparison, Nvidia's current gen GB200 NVL72 system already supports 72 Blackwell GPUs and 36 Grace CPUs in a single system. This is why AMD acquired ZT Systems in order to design and build large rack-scale AI systems similar to Nvidia's. Next year, AMD is planning to release the MI450X, which can scale up to 128 AI GPUs per system. This is to compete with Nvidia's upcoming Vera Rubin NVL144 system, which is expected in 2026. Nvidia's Vera Rubin NVL144 will have up to 144 AI GPUs per system. AMD's MI450X launch will be very important next year because it will be AMD's first rack-scale AI system. If it succeeds, it will help AMD capture more market share in the AI data center market. Let's talk about sovereign AI. I believe sovereign AI will benefit AMD going forward. Major countries outside the US will need to develop their own AI infrastructure to support localized AI workloads and AI applications that are tailored to their own language, cultures, domestic policies, national security concerns, and user data privacy. While Nvidia will likely continue holding the largest share of the AI data center market, many countries will still want an alternative supplier of AI infrastructure. And based on what I know, AMD is still the closest competitor to Nvidia. Here's one example. Just before I started making this video, Trump visited Saudi Arabia, Qatar, and the UAE to strengthen US ties and negotiate large-scale AI infrastructure deals with them. One of the main goals was to make sure that they will be much more aligned with the US rather than China. During this visit, Saudi Arabia's AI company Humane announced a strategic partnership with AMD to invest up to $10 billion to deploy 500 megawatts of AI compute capacity over the next 5 years. This is a major win for AMD because AMD will supply Humane with AI compute, rack-scale systems, networking, and its RockM open-source software platform. Humane chose AMD as a key partner because it wanted an alternative instead of relying 100% on Nvidia to build AI infrastructure. This is my prediction. As more countries develop their own sovereign AI infrastructure, many will look for a second source supplier beyond Nvidia. And based on what I know, AMD is currently the best alternative to Nvidia. Most countries will likely choose to partner with Nvidia, AMD, and US hyperscalers instead of turning to Huawei or other Chinese companies to build their AI infrastructure because they do not want to upset the US government. That's why I believe AMD will capture a small share of the AI data center market over the long term. Now, let me share the most important highlights from AMD's recent earnings call. Management discussed the company's recent AI GPU sales, the upcoming launch of the MI350 later this year, and the MI400 next year. They also explained why AMD's data center business will likely see stronger growth in the second half of the year. Management said this.
Sure. So on the Instinct ramp, I would say a Q1 performance of data center GPU was in line with maybe a little bit better than expected. I think the key point that we've always said about the Instinct ramp is very excited about the MI350 launch. We're right on track for that, launching mid-year. I would say customer interest has been very high. So from a competitiveness standpoint, we feel really good about where it's positioned. Overall, I think one of the advantages that we have with the MI350 launch is that, from a systems overall environment, it's actually very similar to the MI300. So we believe it's going to ramp fast. And we already have a couple of deals that have been announced, including a very important relationship with Oracle in terms of the MI350 series for a number of joint customers. So we're excited about the overall AI business. I think we continue to see strength there. I know there are some uncertainties as it relates to tariffs and other things, but this is one of those areas where from an infrastructure standpoint, there continues to be investment in AI infrastructure, and so with that, we would expect strong growth into the second half of the year.
Yeah, good afternoon. Thanks for taking my question. I know there's been a lot of focus in your upcoming MI350 series, Lisa, but MI400 next year is where you potentially close the competitive gap in a big way, right? You're bringing frontier class model training performance GPU in a rack scale solution. More and more, the challenges has been standing up these rack scale platforms, power, cooling, footprint, networking, connectivity, telemetry, et cetera, right? Lots of well-telegraphed issues with standing up these rack scale architectures. So as you've shared your MI400 rack scale solution architecture with customers, like what is the AMD team doing to potentially address the ease of these deployments with the MI400? And, just in general, what's been the overall feedback been like on MI400?
Yeah, Harlan, thank you for the question. I think, look, we're excited about the MI350 series launch that's coming up, but we are extremely excited as well about the MI400 series and the roadmap there. I think we've been very active with customers on our roadmap. As you know, this is one of those areas where you absolutely have to be planning many quarters in advance for that. One of the primary reasons we acquired ZT Systems was exactly to address this rack scale architecture. And so from that standpoint, the closing of the ZT acquisition has been very timely. What we're doing right now is, together with our ZT design team, as well as our customers' design teams and our own systems design capability, really actively planning what those rack scale systems are going to look like. I would say the MI400 series enthusiasm from customers is high, and there's a lot of activities that are going on right now to ensure that we do in fact learn from some of the let's call it some of the challenges that have occurred with some of the recent deployments.
Thank you. I had two questions as well. On the first one, just near term, Lisa, did your GPU sales grow sequentially in Q1? How much was MI308 in that number? And if you look at 2025 overall, do you think GPUs can still grow despite this China headwind that you mentioned relative to the $5 billion plus you did last year?
Yeah, sure, Vivek. So let me answer the second question first. We absolutely believe the data center GPU will grow, and we think it'll grow strong double digits. We had a plan that was second half weighted, and it still is. Relative to the MI308 situation, it's certainly a headwind, but one which we think is well contained given everything else that we have going on. And relative to the Q1 performance of data center GPU, it was down very modestly from Q4, which is what we expected. We did see good overall demand actually in the first quarter driven by MI325. So we had a significant adoption by a large foundational model company, which was very positive there. And as we go forward, we expect that we will continue to broaden both customers as well as workloads within our current customers for the Instinct portfolio.
Let me show you this consensus forecast from Seeking Alpha so you can see AMD's expected growth rates going forward. First, AMD's revenue is projected to grow by around 23% this year. After that, AMD's revenue growth is expected to slow to the mid-teens over the next several years. I think these forecasts are reasonable. AMD will likely capture more CPU market share from Intel over the next several years, and potentially gain more market share in the AI data center market once AMD releases its Red-scale MI400 system starting in 2026. In terms of EPS forecast, AMD's EPS is expected to grow faster than its revenue growth over the next several years, mainly because of operating leverage. Let's talk about AMD's valuation. There are several ways to value the stock. At the time of making this video, AMD's forward PE is expected to decrease to around 28 this year, which I believe is reasonable given the company's projected EPS growth this year. Looking ahead to next year, AMD's forward PE is expected to decrease further to around 19. This is quite low for a semiconductor company with projected EPS growth of about 43% year over year. So based on these four P's, I believe AMD is either fairly valued or slightly undervalued now. Let me show you an investing app I've been building with a friend since last year. This is a preview. We plan to release this investing app later this year, once we have fixed most of the bugs. In this chart, the orange line represents AMD's fair value over time, the blue line represents its share price, and the dotted lines represent price targets. I like to focus on these three values: the fair value estimate, analyst average price target, and our own price target. They show whether the stock is slightly undervalued, fairly valued, or overvalued now. At the time of making this video, AMD is trading slightly above its estimated fair value of $105 per share. In comparison, the analyst average price target is around $142 per share, while our own price target is around $153 per share. So based on these figures, I believe AMD is fairly valued because it's very close to the fair value line here. My plan is to sell my AMD shares once the stock is near these price targets within the next 2 years. I also calculated AMD's intrinsic value using this intrinsic value model. I always use this intrinsic value model to calculate each stock's intrinsic value, so I will know when a stock becomes undervalued, fairly valued, or overvalued. If you want this intrinsic value model, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define AMD's intrinsic value as its future free cash flows discounted to the present day. I use the discount rate of 10.5% here. You can use a higher discount rate here if you want to be more conservative. Based on the long-term growth prospects and the expected growth rates I talked about earlier, I believe AMD's revenue will grow between 15% and 20% this year. After that, I believe AMD will grow at a compound annual growth rate or CAGR between 12.5% and 17.5% each year over the next 5 years. My base case scenario is that AMD's revenue will grow at around 15% annually over the next 5 years. These growth estimates are actually lower than the consensus forecast I showed you earlier. I used a long-term growth rate of 8.5% to calculate the terminal value. If you want to be more conservative, you can use a lower long-term growth rate to calculate the terminal value. Over the next several years, I believe AMD's free cash flow margin will expand over time. Let's go over these 3 case scenarios: worst case, normal case, and best case scenarios. Under the worst case scenario, we forecast that AMD's revenue will grow by around 15% this year. After that, we forecast that AMD's revenue will grow at a CAGR of 12.5% each year over the next several years. Then AMD's intrinsic value should be around $204 billion for the entire company, or $125 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we forecast that AMD's revenue will grow by around 17.5% this year. After that, we forecast that AMD's revenue will grow at a CAGR of 15% each year over the next several years. Then AMD's intrinsic value should be around $227 billion for the entire company, or $139 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we forecast that AMD's revenue will grow by around 20% this year. After that, we forecast that AMD's revenue will grow at a CAGR of 17.5% each year over the next several years. Then AMD's intrinsic value should be around $252 billion for the entire company, or $154 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, AMD's intrinsic value should be around $139 per share. I also use a forward sales valuation model to estimate AMD's intrinsic value, which should be around $190 billion for the entire company or around $116 per share. If we calculate the average of both valuation models, I believe AMD's intrinsic value should be around $128 per share. Morningstar has given AMD a slightly lower fair value of $120 per share. After considering all the valuation models I showed you earlier, I believe AMD stock is either fairly valued or slightly undervalued now. So is AMD stock a buy, hold, or sell right now? Personally, I believe AMD is a hold now. Here's why. I expect AMD to recover over the next 1 to 2 years, mainly because it will likely continue gaining CPU market share from Intel. AMD's current gen Ryzen and EPYC processors are much more energy efficient, scalable, and more performant than Intel's best CPUs. More importantly, AMD has a much stronger product roadmap than Intel. AMD also uses TSMC's best process node technologies, which are 1 to 2 generations ahead of Intel. Meanwhile, Intel has fallen behind nearly all of its major competitors, including Apple, Nvidia, AMD, TSMC, and even Broadcom. As I've mentioned before, in the semiconductor industry, once a company falls behind in leading-edge chip design and manufacturing, it becomes extremely difficult to catch up, and this is exactly what Intel is facing right now. I actually predicted this several years ago when I compared Intel to AMD. However, in the AI data center market, I believe AMD will capture only a small portion of the market, likely in the low single digits, at most around 5%. I believe Nvidia will continue dominating and maintaining around 80% to 90% of the AI data center market because of the competitive advantage I talk about in this video. I own AMD in one of my investment accounts. It's a very small position. It's only around 1.6% of the portfolio. My plan is to hold it until it gets closer to my price target, which is around $140 to $150 per share. After that, I will likely sell AMD and reinvest the money into better companies such as Nvidia, TSMC, Google, and Microsoft. These companies are much more profitable and have much larger economic moats compared to AMD. I like to invest in the best companies that are near monopolies in their markets. Now, all these are only my opinions and my analysis that's based on my research. They are not financial wise. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.